Imagine being able to know when a stock is heading up or going down in the next week, and then with the remaining cash you have, you would put all of your money to invest or short that stock. After playing the stock market with the knowledge of whether or not the stock will increase or decrease in value, you might end up a millionaire. Unfortunately, this is impossible because no one can know the future. However, we can make estimated guesses and informed forecasts based on the information we have in the present and the past regarding any stock. An estimated guess from past movements and patterns in stock price is called technical analysis. We can use technical analysis, TA, to predict a stock's price direction. However, this is not 100% accurate. In fact, some traders criticize TA and have said that it is just as effective in predicting the future as astrology. But there are other traders out there who swear by it and have established long successful trading careers. Artificial intelligence is viewed as the holy grail of technology. It's being investigated as a way of solving many of the complex problems that face mankind. What makes artificial intelligence attractive is that it combines unbelievably fast computing power with an intuitiveness that was previously only available from human involvement. Artificial intelligence is being used in the financial markets. Many believe that soon artificial intelligence will crack at the proverbial code of the markets by taking advantage of big data and machine learning. There are online trading platforms that allow users to take advantage of machine learning and artificial intelligence. Artificial intelligence has not reached the point where it has unlocked the secrets of making money in the market. What it is doing currently is giving investors a systemic edge. Computers are getting better at recognizing when risks should be taken and the amount of risk to take. There is a proverb that says, if a man could see 3 days into the future, he would have riches that would last 1,000 years. The ability to accurately predict the future gives a person unprecedented power and control over their financial destiny. This is what people are looking for from artificial intelligence. To be clear, most of the best online stock trading apps today use some form of AI, but they're not at the point where it will be able to accurately predict the future. If they were, the stock market would quickly come to a disastrous end. What it can do is look at quantifiable data and data that previously was unquantifiable, such as speech, video, and photographs, to help investors get a clear picture of where a business is, how society feels about the business, and what the financial predictions for the business could be in the future. The biggest challenge that AI has with the markets is that the market is a living thing. When artificial intelligence is applied in a factory, it can help machines make smart decisions within a predefined set of boundaries. In the market, nothing is stationary or predefined. There are many things that impact the markets that neither humans nor machines can foresee or process. Things such as social unrest, political changes, natural disasters, and economic upheavals can affect the market in phenomenal ways. For example, no amount of artificial intelligence or machine learning could have predicted the far-reaching impacts of COVID-19 on the world. The markets in different countries were affected in unique ways because of political, religious, and cultural factors. Countries that one would have predicted to be able to effectively treat COVID-19 and maintain a strong economy were crushed. Other countries that one would have predicted to be vulnerable to the virus have been able to address it and their economies are moving forward. One would have predicted that a worldwide pandemic would have brought the market to its knees. However, many sectors are thriving during the pandemic in ways that no one saw coming. As a result, artificial intelligence is limited in how much of the future of the markets it can predict. The rise of online trading platforms has made it even easier to gather lots of useful information. Artificial intelligence does a good job of taking the information available and making predictions about how the market will react within an 8-hour period. It can gather information, take samples, and make predictions based on the actions of machines and humans during that 8-hour time frame. Defining the role of AI in predicting investments. The US stock market can produce phenomenal returns. Artificial intelligence and machine learning have done a superb job in helping investors get a clear vision of what the market is doing and a short-term understanding of what the markets might do. However, since artificial intelligence and machine learning rely on historical stock data and historical data is time-dependent, there are limits to what AI can do. In order to successfully predict the future, AI would need to have access to information like knowing the quarterly earnings results of a business ahead of time, which in most cases is impossible or illegal. Artificial intelligence and machine learning projects can be beneficial and effective if the information used when training the model and the data the model encounters in the future are produced by the same distribution. This just doesn't happen in the real world. Predicting the next day's stock direction is random. There are too many outside factors to create a reliable model. A lot of valuable information can be gathered from artificial intelligence and machine learning. However, it has not and may never reach the point where it can accurately predict the future of the market with any consistency. Why artificial intelligence will never beat the stock market. Over the past decade, the belief that artificial intelligence could solve the complexities of the stock market has spread like a wildfire. The notion that humans lack the capacity and capability compared to machines, who will, without fail, consistently beat the market over time. By simply programming a machine, it will produce the ultimate formula, making you filthy rich in the process. A radical change in society where anyone can make money, but not just a stable income, a modest fortune. Unfortunately, though, this is a mere fantasy. There's a major flaw in algorithms built solely to predict future market moves. They don't. They only respect the technical aspects of an asset by taking into account past price movements, avoiding any consideration for future fundamentals. Any veteran trader will tell you the market isn't there to give away free money. Instead, it's a competitive environment punishing anyone or anything who tries to make a quick buck by trading on reactionary information already priced in. Technical analysis alone will not make you money. In fact, the myth that it does has fueled an entire industry that preys on the vulnerable. As the homepage of many online brokerage websites illustrates, up to 96% of foreign exchange traders have fallen for the trickery. The truth about the brokerage industry is it makes money when its clients lose. So when your broker offers you a plethora of trading algorithms to choose from, the alarm bells should be ringing. Still, you may fall for the con, because the trickery itself is seductive. Let the algorithms do everything for you, sit back and relax until you can retire. All the algorithm has to do is choose the right direction, either buy or sell, right? Wrong. In reality, feeding an algorithm with data based purely on technicals is the equivalent to putting on a blindfold and aiming at a dartboard. You hit the board 1 out of 10 times, but the rest hit the wall. The buy or sell illusion is an anchoring effect, a cognitive bias discovered by the renowned psychologists Daniel Kahneman and Amos Tversky, where your mind tricks you into believing your chances of winning are much higher than they actually are, due to being presented with a binary choice. The stock market is one of the most complex systems we've created as a species, and it cannot be beaten all the time. It's the collective decision-making of not just humans, but also machines, algorithms, and algorithms predicting what other algorithms are going to do next, an infinite loop of complexity. And when you multiply the probability of all these inputs together, the chance of succeeding is minuscule. Realistically, your odds are way less than 50%, and, in some cases, even less than 1%. It's clear by now that the complexities of the market can overwhelm a human, but they can also overwhelm machines, as they have yet to counter massive market fluctuations. When they do occur, operators are forced to switch off the algorithms and allow human traders to take over. The modern market environment has become so dynamic, machines have failed to protect against huge standard deviation moves associated with black swan events. For example, in 2015, the foreign exchange markets were a non-volatile asset class. All the major G10 currency pairs were range-bound, moving a few hundred pips here and there. For the euro to Swiss franc currency pair, it was a quiet start to the year until January 5, when the Swiss National Bank, SNB, unexpectedly abandoned its cap of €1.20, causing a colossal intra-hour move of 20%. In a matter of minutes, hedge funds blew up, and retail traders lost a fortune, but the machines did too. Not only are machines incapable of predicting a black swan event, but, in reality, they are more likely to cause one, as traders found out the hard way during the 2010 flash crash, when an algorithmic computer malfunction caused a temporary market meltdown. Ultimately, AI is doomed to fail at stock market prediction. Beating the stock market over time, however, is possible. The solution lies with us because we humans have an edge. We have the ability to make informed decisions by analyzing future catalysts of an asset and the reasons why they will move the price up or down, a strategy artificial intelligence has yet to beat us at. Success in trading, like in any other discipline, requires hard work and extensive research, but this only results in having a slightly better chance of succeeding. With the best traders only getting up to half their trades right, this shows that if we humans have failed to decipher our own collective minds, then AI doesn't have a chance. Please don't forget to subscribe and activate your bell icon so as to be notified when we upload cutting-edge videos like this one. Thank you for being here.